Well, we try not to play sectors here. I think that there is some hope that lower regulation can help financial sectors, but really, the longer term picture, I think, is what Janet Yellen described, which is that the economic data overall for the United States is positive, and that what's buoyed this stock market in across multiple sectors has been increased earnings. And I think that this is going to be, sentiment will rise and fall from day to day, but overall, this is a market that is very much driven by earnings performance throughout this year, and I think will continue to be.
So at what point does this rally stop? And at what point do people, traders, investors, stop and look at the market and start to look at valuations and say, this market has run too far ahead?
Well, the bull markets end when either the Fed raises rates significantly to stave off inflation, and we don't see much sign of inflation right now, so the Fed is able to sort of pace itself at the rate that it wants to, or there's a recession. And obviously, 8 years into a recovery, we're looking for all the sorts of things that could possibly go wrong, and yet the economic data is relatively positive. So, you mentioned valuations. The 12-month trailing PE ratio for the S&P 500 has remained stable at 21 times throughout for more than a year now. So the rally that's taken place has not been because of rising valuations. It's been because of improved earnings across the board.